Saya start sebab saya punya C. Nampak tak doktor?
Okay, nampak.
Okay. So Canslim, so C ni adalah refers kepada current earning growth. So my name is Fakila Anurul. So I'm going to present about C in Canslim. So basically the letter C in the acronym Canslim refers to current earning growth. So what I want to highlight here when we're talking about earning, so it indicates the company's profit or income for a certain period. So earnings can be prepared in yearly or quarterly. So yearly will be normally in annual reports, while quarterly it will be in quarterly annual reports. So all public listed companies should prepare annual reports in which it will disclose the operating and also financial performance over the past years. And then the information in the annual reports is very crucial and also important as the data, especially which is the data is very important to the shareholders and also to the future investors. This is according to CARES 2011. And then based on the information provided in the annual report, so investors will be able to identify and also make analyzations in the current earnings growth through the earning per share, which is EPS of the company. So this is how the earning per share will be calculated by using the following formula, which is EPS. It will be net income. You have to minus with preferred dividends and then divide with weighted average share outstanding. So EPS, it will indicate how much the company's income was earned from each of the share outstanding. So it is also the major variables in determining the price of the share. So this is according to Islam Han Chaudhry in 2008. So if the company have a good in EPS, so it will be considered as preferable to be invested in terms of if the EPS value is higher. So apart from that, Islam Han Chaudhry and also Adnan mentioned that good earning per share will resulted in the rise in the market price of the company stock, and then this higher stock price might create a positive impressions of the company's product in the minds of customers and also resulting in greater demand, increase in sales, and also ultimately higher earnings. So the inverse might also occur. It means when the EPS lower, so it shows that there will be a depressed stock price resulting in lower consumer confidence, or maybe fewer in their sales, and also it will make ultimately lower earning per share, which is the EPS. So, but the relationships are very circular and also not direct. So, as a summary, the growth of EPS can be made through making a comparison in at least 2 or 3 years or quarters. So if the company growth of EPS increase, so it will indicate that the company becoming more profitable over time. And if the growth of the EPS decrease, so it will indicate that the company becoming non-profitable and also unhealthy. So it will give a lower return to the shareholders if the EPS of the company decrease. So in addition to that, EPS growth rate of 20% to 25% should be shown in the most recent year or quarter, or preferably in the last 2 years or quarter, according to Innovation Ministry. But according to Lutekram and also Rayong, 2014, he said that O'Neill recommend that investment should not be made if the growth of EPS is lower than 80%. So thus the growth of EPS is indeed one of the important elements to be analyzed and also examined by the investor. Okay, so these the calculations on earning per share, how we can, as an example, so assume that the company has net income of 40 million and then the company has 15 million of share for half of the year and 20 million share of another half of the year. So the company pay out 3 million for their preferred dividend. So what they have to do is just put all of the figures in the formula which is the net income is 40,000. And then you have to minus with the preferred dividend, which is 3 million. And then because of they have shares for 50 million half of the year, and another 20 million in half of the year. So that's why 0.5, I just have to times with 15,000, 15 million, and then plus with the 0.5, another half of the half of the year, times with 20 million of the share. So I will get 2.11 per share. This is how we want to calculate EPS. And then to calculate the growth of earning per share, growth of EPS. So EPS1, so it refers to the current year that we want to calculate, or current quarter, while EPS0, it represents EPS for the previous year or previous quarter. So this is just an example. So from here, we get the EPS for quarter 3 is 19.6, for quarter 2 is 15.9, quarter 1 is 15.79. So what that I can make from this, what that I can make the conclusion from this calculation is, so earning per share of the company is increasing every quarter, but growth of EPS in quarter 1 and also quarter 2 is failed to meet the 18% threshold as suggested by O'Neill. So this will help the company as one of the investment options. But in quarter 3, the company growth, the EPS growth has increased to 19.6%, which is above the threshold, which is 18%. So the company is believed to becoming more profitable over time, as the higher percentage of the growth is better. Thus, the growth of the company should be monitoring closely, as the comparison should be made at least for 2 to 3 quarters. So a company with strong earning per share might see the market price of its stock rise, and then the stock price might create a positive impressions of the company's product in the mind of customers, so resulting in greater demand and also increasing sales, and ultimately higher in their earnings. In inverse, so there might occur poor EPS might depress stock price, resulting in lower consumer confidence and also fewer sales, and ultimately lower earning per share. So that's all for current gross earnings.
Okay,